Alright, quick update on crypto.com. So it looks like crypto.com, Bitcoin and other altcoins are currently losing steam. If we do look at what's happening over on the squeeze bomb right now, you can see this is our momentum indicator of choice. There has been a multitude of times where we do switch over to light green very temporarily. Obviously we know the markets move in waves. They move from bullish waves, bullish waves and bearish waves. And at this moment in time, we're currently basically sitting at the start, or maybe we're sitting at the apex of a very small bullish wave on the 4-hourly time frame. But what you will notice is the trend is still macro bearish. I mean, this is very obvious. We zoom out, no Moonboy Hopium over here. I mean, just look at the 4-hourly EMA ribbons. I mean, they haven't been bullish since 47 cents. So it's very easy to just look at these on the 4-hourly time frame and say, okay, until we have a successful bullish flip above both our 13 EMA, which is this blue moving average on the chart, until we have a successful flip of the EMA and the 13 EMA, then we are still bearish. And you can see, you might be wondering, why are we not bullish here? And this is because we only did 2 of the things we need to do in order to break bullish. So for example, number 1, you've broken up above the EMA ribbons, you've come back down, and this is the point in time where you need to start pushing up and taking out the invalidation zone. And on the 4-hourly time frame, we poked our head above it and boom, got shot right back down. So we could very much see that this was a fake out as soon as it happened. It was basically a 4-hourly Bart Simpson pattern, came up, jagged hair, boom, all the way back down. And we always pretty much see these patterns over in the crypto markets. Now, since our last video, we did make 2 predictions. Number 1, this looks a lot more nicer over on the daily time frame. If I switch over to the daily, you can see there is a very clear M pattern that was playing out right here, and we did extrapolate the price target of this. This was our first breakdown move since the last video. You can see from here to the breakdown, this yielded a price target down here at 10.2 cent, which was our first price target from our previous video. You can see we highlighted this right here just before, or just on the day that this broke down, or the day before this broke down. This was a pretty nasty M pattern that got slapped down from the 13 EMA, got slapped down from the moving average, and subsequently we were able to call this price target. But there's still another price target. In fact, there's still 2 price targets, but we've updated these twice. So I'm going to delete the newest one so we can simply look at what happened on the older ones. And we were predicting a 60% drop on crypto.com down to 7 cent. And at this moment in time, we've already come down 36%. So that's very nice. In my opinion, we are going to continue this move and drop a further 37%. Now, if we move on from these indicators, we can look at the volume that's coming in on the daily, and we're already starting to get battered down with a pretty nasty sea of red at this moment in time. If we switch over to the Heikenashis, you can see, we've really only just started pushing our head up a bit, and we're already getting these green candles where you can see the wicks to the upside are being pushed down, pushed down, pushed down, pushed down, pushed down, pushed down, pushed down. And these always normally mean that you're going to get another big move back down to the downside. So it seems pretty obvious the direction that we're going right now. If I delete these 4-hourly bunny hills over on the daily time frame so we're not getting ourselves confused, you can also see the squeeze momentum indicator higher time frames is very much pushing us to the downside. And this volume candle is going to switch between bullish and bearish depending on where we are. We're really just lollygagging right now. So as you can probably tell, this has switched colors a few times this video. But nonetheless, 4-hourly time frame is still pretty telling. You have not broken above the EMA ribbons, and we're going to be pretty lucky here because the 13 EMA is going to intersect with the 4-hourly EMA ribbons within the next 2 days or so. We also have the stock market opening tomorrow. At this moment in time, I know you probably don't want to hear about the stock market if you're here for XRP USD, but the fact of the matter is the stock market is currently bearish and the dollar is currently bullish. These are 2 indicators which will not fare well for crypto.com. It will not fare well for Bitcoin. So within the next 2 days, we've got an intersection of these EMA ribbons and the 13 EMA to be bullish, which I do not think we're going to do, because if we look at what's going on right now, we are emming out, we are running out of momentum. Lower time frames, this really just looks like another bunny hill to me. And 4-hourly volume candles, we can see, we have these times where we have big blow off amounts of volume, people buy the dip, we come up to the EMA ribbons, no one continues buying, and we roll back down to another low. We did this here. where we had a bit of volume coming in for a bit and we rolled down to another low. You can see it happen here, roll down to another low, and at this moment in time we've got a big blow off, singular green candle in volume, and it's followed up by selling pressure. So in my opinion, we're really not ready to take out this EMA ribbon. We're not ready to take out the 13 EMA. So as such, I don't even think something like this would happen where we would come up to higher price targets and get rejected. In my opinion, we are going to start heading down very, very soon, within the next 24 to 48 hours. In my opinion, 24 hours, give it to about midday, 2 to 3 p.m. or so, coming into tomorrow. Once the stock market's open, and we'll have a pretty good indicator of what is going to be going on with crypto.com. Wrapping up the video, because I do just want to talk about one or two more things. We are also forming another pretty wham bear flag, and if this does break out, this can lead us down to our next level in the sand, which is all the way down here at 4.8 cent. Now, this correlates to a Fibonacci that I have since deleted, because I do have a lot of fibs over on my chart. So let me see, I believe this was from the low to the high right here. If we line it up, we've overshot it a tiny bit. Let's see. Oh, okay, if we go over to the 4-hourly time frame, it's probably drawn to the candle body close, which is this green line of resistance. And then if we zoom out, you can pretty much see, yeah, right about here. So we've got two levels actually. You've got the 3.618 coming in right here at 5.2 cent, and we're going to mark this orange so you know that it's a Fibonacci. And this green horizontal ray down here is not actually a price floor or a support level. It is actually the bearish price target of this massive bear flag breakdown that we had momentarily before forming this before forming this slightly smaller bear flag target. But nonetheless, let me leave this fib over on the chart so we can remember that for the next video. So all in all, it does seem like crypto.com is going to start rolling down. Bitcoin is starting to roll down from the EMA ribbons, and crypto.com against Bitcoin still looks very macro bearish. In my opinion, this is going to continue to head down. The last crypto.com video we made, we said this was going to come down 35%. It's currently down about 14%. So this would mean, from where we are now, another 25% to the downside. Look at the momentum indicators. They are still very much hanging in there, very bearish in the higher time frame. So I'd be very cautious if you were looking to jump into this right now. I do think lower price targets are in play before we do recover towards the latter half of this year. That is all I've got for you today for crypto.com. As always, cowboy out. Peace.